What's up, mortgage coach community? Welcome to the Tuesday interview. Every Tuesday, we're here to get better together. Today, as our special guest, we have Wally Elibiary. Wally, how you doing, brother?
Good, man. I appreciate you having me. Thanks so much.
Good. I always love to interview you, brother. In preparation for this call, I was reviewing some of our past interviews, and I've interviewed you a lot. It's been a long time, but in 2007 and 2018, you were on a little more often. So it's a real gift to have you, brother.
I appreciate you having me, man. It's funny. Like I'll see those videos pop up on YouTube from time to time. But yeah, I've kind of grown up through Mortgage Coach, so I appreciate you having me.
Yeah, well, it's always a gift, and I still remember when you built that bookshelf, the Learn bookshelf. Make note, everybody. Wally has built this custom bookshelf for all of you who are going to ask questions. He just did it. He figured it out. He designed it. He found someone that could build it, and he made his vision happen. So Wally, let's assume that there's a couple of people listening to this interview that don't know your story, don't know your production. Let's tell them a little bit about your practice, and then let's keep the story going for the people that do follow you in the mortgage coach community. Let's tell them the 2019 chapter of what's going on.
Yeah, absolutely. So I am 40 years old, and I've been in the mortgage business 21 years. So I'm an old fart in this business. Finally starting to kind of figure it out a little bit. So right now, production, ranges from 70 million, 80, 100 million, somewhere in that range. But the biggest thing is most people kind of want to find out. If you go to Coach Wally at Facebook, so Coach Wally on Facebook, you'll be able to see all the videos that Dave's kind of talking about. But you'll be able to see, so 2014, I was doing it, or 2013, I was doing about 36 million. Then it goes to 45 million. Then it goes to 80 million. Then it goes to about $100 million in production. So most people like to ask, well, how'd you go from 45 million in 2014 and up to 80 million in purchase business in 2015, then 100 million from there? And the biggest thing is, a lot of it candidly is purposeful business planning. I can't show you my calendar, but I'll have 85% of my day consistently. That is 100% green time. So it's dollar per active activities. And if my assistant is bonus, his name's Kayla, my assistant is bonus, if I have a minimum of 75% of my day, 100% green time. So 75% of my day is green time. So dollar per active activities. And the biggest thing that I'd want to share to you guys is I used to never have a plan. Now a plan is formulated for me before I even walk in the office. And all I do is to simply follow my calendar of appointments that are already scheduled for me. They already have the mortgage coach total cost analysis in the calendar, right, that we're going to review. And also borrowers already see that, and everything is all calendar invited out. So I just say the biggest reason of that increase in production where we're at today, and I'll kind of unravel a little bit more, but it is 100% of this purposeful business planning.
Love that. And so 75% of your day is green time. You've got a team to make sure that happens. Real quick, what are those, in order for it to be green time, what are the different categories of meetings that you're having? Like, what does that mean? Define it.
Green time to me is going to be a meeting with a borrower face-to-face, a meeting with a wealth team face-to-face. I'm coaching either a real estate professional or financial advisor or CPA face-to-face. I'm doing activities that make us money. That's as simple as it is. So green time, it's business activities that make you money. Yellow time, and this is the old Todd Duncan thing that he taught us, taught me at least in the late 90s, early 2000s. Yellow time is what's planning towards getting to the green time. Now, the yellow time is going to be activities that are like, say pulling credit, reviewing a 1003. So things that are going to build up to that green time. Red time is just email, probably, realistically. So my team is bonus if 75% of my day is green time or more. Then their bonus is less than 15% of our day is yellow time, and I'll do 5% of my day is red time. So my email is managed by my team. So if you ever truly want to talk to me, you got to text me. But if you call me, the phone's forwarded to the office. and the email is completely managed by my team, and the calendar is completely managed by my team. I just come in, I'll have 15 to 17 appointments a day, 15 to 17 appointments a day, and I'm boom, 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 30 to 45-minute increments. And even my meal prep is organized on there. I'm a little OCD if you haven't guessed, but it helps keeps me efficient. It helps me keeps me efficient.
Well, hey, it's working, and there's something that everybody can learn from that. And then I heard you mention that you actually have a link to the total cost analysis. So for loan officers that have teams, Wally has his team do the prep of the TCA so that when he goes into that call, he's actually got a link to the total cost analysis within the calendar invite. For all you loan officers that don't have a team, it's, you got to do your own prep, but it only takes 5 minutes until you get there. And for those that do have a team, adopting mortgage coach is as simple as saying, hey guys, this is our new team standard. Wally, before we get into this becoming, the captain of the wealth team, could you just give some advice to, other team leaders or loan officers on, adopting mortgage coach? Any words of wisdom on that?
We started Mortgage Coach. I feel I was one of the early adopters at it back in like the 2007, 2008, when we used to like buy it as a disc and plug it in. But, to me, Mortgage Coach allowed me to speak intelligently about a topic that I knew I could explain it well, but I didn't have the graphs or didn't have the ability to explain it and articulate it in a way that was professional. When I started Mortgage Coach, realistically made it part of our model, like 2013-ish or so, then it became part of our team standard, where every single client gets a total cost analysis back in like 2014, and it's an absolute standard. The biggest thing about that is it became part of our lifeblood of the process. It became part of as our production grew, we relied so much on Mortgage Coach. And if you ask me what is one technology that we couldn't operate a business without today, that doesn't mean you got to increase your prices, Dave, but that we couldn't operate without our business without today, it would be 100% Mortgage Coach. As much as I love Jungo, as much as I love Salesforce or anything else from there, or HomeBot, or any other technologies that we use, it'd be 100% Mortgage Coach.
Well, I love that. Well, a lot of that is because your value proposition is advice. That's how you position yourself uniquely, and that is how you uniquely give service and value to consumers. So let's talk about this journey. When I interviewed you in 2017, you had not really mastered your past customers. You had a good purchase, first business, but you were leaving a lot of loans on the table. And if I remember the numbers right, you went from like 21 past client loans in 2017 to either 79 or 81 loans in 2018. And then I think when I interviewed you earlier this year, you were saying, hey, not only am I going to continue to focus on my past clients because I want to hit 100 million, but I'm going to focus on financial planners and CPAs, and I'm going to focus on how many referrals. Like your number one metric was how many referrals you were going to give to all your partners. So give us an update. You're going to be speaking at Sales Mastery in next week. Give us an update on where you're at and what it means to be captain of the wealth team.
Yeah. So I remember probably 3 of the 7 things you just said. So you're going to have to help me along here. So what was the first one?
Yeah. So tell us where you're at with the wealth team right now. And I did, man. I really ran on with that question. I gave you like 3.
You got to just a loan officer. All right. So the first thing is where we are. So yes, 2017, we did roughly about $100 million in production, and only 3% of our database, 3% of our business came from our database. A whopping 3%. When you do, almost $100 million production, only 3% of your business comes to your database. That tells you do not have a healthy business. That tells me that if I don't go out there and slang with realtors and go get loans day after day after day, like I'm not eating. And it also tells me that the service I provided wasn't worthy for a referral from a client in process or a past client. And lastly, it also tells me that I never even had a model that was consistent of asking for referrals. Okay. So what we focused on in 2018, we went from 3% of our business came from past clients to 31%. And that's what Dave's referring to. So 3% in 2017 to 31% in 2018. We did roughly about $80 million in production in 2018, which is great and all, and that's awesome. But it was a healthier business. Yes, we did less business, but it was a healthier business. And it was a healthier business because we were getting referrals from clients to process. We were able to get our clients to listen to us about doing referrals out, and that's when we started doing the annual mortgage review. I ended up being at 2018, like I said, going from 100 million down to 80 million, which it sounds bad. But to me, going from 3% to 31% was probably one of the highlights of my careers. And also from there is we started doing annual mortgage reviews about, candidly, somewhere in the neighborhood of about, golly, I'd say 4 to 6 hours of my day, over and over and over, was me doing annual mortgage reviews with clients. And you got to remember, these are clients that are going to be at like a 3.25% on a 30-year fix. Obviously, there's no way in heck I was going to refinance those clients, but I was helping make sure that they got the homestead exemption file. I was helping them dispute their taxes. I was helping them renew or shop around their home insurance. I was helping them find out a great CPA or a great wealth advisor. And to me, that year was also great because I was able to refer out $243,000 in commissions out to my wealth partner teams. $243,000 in commission sounds like a lot. And that was out to my real estate teams I work with and also the wealth team. So I had CPAs, financial advisors, family will attorneys. And you got to be bold enough to ask, hey, I'm sending you a referral so I can keep my finances accountable. What would your commission be on this client that I'm referring you? So I set out a goal in 2019. The production goal was always going to be there at 100 million. And that's great. Making a 7-figure income, it is great, but now you got to build a business that has depth, and you got to build a business that has equity in the business. And the way that I did that was, okay, I'm going to build this business. I've got a big goal this year that I'm going to refer out over $500,000 in commissions. $500,000 in commissions out to my real estate teams, my CPAs, financial advisors, family will attorneys. So real estate teams I did a pretty good job at. Family will attorneys, I'd give myself a C or a D, somewhere in that range. Financial advisors, I crushed it. And wealth team, I crushed it. At least I feel I crushed it. And then CPAs, I've done an okay job. I haven't really said I've crushed it there. But so far, year to date, through October, we're at $461,000 in commissions. $461,000 in commissions that I've referred out by doing the annual mortgage review process with our clients from our database. To me, that's huge, and I'm more proud of that than closing 100 million. I'm more proud of that than me making 7 figures. I'm most proud of having a healthy business that creates referrals from my referral partners. Yep. Did I explain that okay?
You did, and I just want everybody to think about what a sustainable mortgage practice that is when you've got the habits, you've got the processes that you're referring that kind of business. I don't care what happens with interest rates. I don't care what happens with, disruptors and digital lenders coming into play. If you've got that type of systems, process, and habits, you've got a snowball mortgage practice that's going to do well in every market, and it's going to just get better and better and better. The more new clients come in, they come into this system where they're continuing to get value. Part of that value is a total cost analysis, but all of that value is just Wally being personally present and making sure that he is connecting with people and not telling them that he's their lender for life, demonstrating that he's their lender for life. So guys, this is, I think it's an important success story. Wally, congratulations for getting to the point where you've got your practice at this level. So you said that you crushed it with financial advisors. First let's define, at least in your world, because I interviewed Craig Strent recently, all about, how to do business with financial advisors. And I have a feeling his definition and top advisor might have nuances that are different than yours. And then tell us about that. Like, what did you do this year? What were we'll get into it. I don't want to ask extra questions. Define them, and then I will add more questions.
Got it. So to me, I struggled with this one earlier in the year, and I struggled with this one at the end of last year. And what I struggled with, I was truly going after a financial advisor. And a financial advisor, there's a few different categories out there. And I figured out a niche category that I specifically have focused after. And I've done a really good job getting my foot in the door. And I knock on wood, I've had the right introductions. That's just bottom line. But where I struggled, and I've learned the financial advisors that don't work well for me, are the ones that will have a book of clients of 100 clients, and that will invest, that will have a portfolio that they manage of like $1 billion or $500 million. So those are the financial advisors I was going after because they had higher net worth clients. So what I learned from there was majority of those clients had like files that had 80 tax returns in there, and I couldn't do anything with those loans anyway. Number one. Number two, majority of these clients could buy 10 houses cash, and they don't need me for more, right? So then I realized, okay, so who in the financial advisor world can I focus on that has a large amount of database and that has as many appointments as I have? And to me, that was ones that were focused on life insurance. And the life insurance ones are truly focused on life insurance, but not term life insurance, whole life insurance. I'm personally with Northwestern Mutual. I've been with Northwestern Mutual for almost 7 years now. And with me focusing on clients at Northwestern Mutual, it took me probably 1.5 years to get the right introduction. But I got the right introduction to the head of Northwestern Mutual in Dallas-Fort Worth, which turned out to be the head of Northwestern Mutual for all of Texas, which he introduced me to the top 10 financial advisors that are with Northwestern Mutual that have a database of 1,000 to 1,500 to 2,000 clients or more that are focused on life insurance and life insurance only. They're not stock market people. They're not investment portfolio, IRAs, mutual funds, all that stuff. And I don't know the first thing about that stuff anyway. But to me, I know life insurance ridiculously well. I know cash value life insurance. That's how I've bought. I put my money into my life insurance policies. I borrow against it, and I go buy rental properties. And I'm up to about 70 rentals right now. But I do that same cycling where you're going through the life insurance policies and buy real estate with those funds. So I know that ridiculously well, and I've done that for 7 years. So I can speak about it. I'm also a client of Northwestern Mutual, so I can talk about their culture. And with me being able to learn that portion of it the most, and I'll actually show you, give me 8 seconds. Let me show you something. So real quick, Dave, this is what I've had to go do. So this is Wally going back to school. So I went and learned about all the top financial advisors. What do they study? What certifications do they do? What about their businesses do they need help with, and how can I coach them about their business? What books are they reading, and how are those books helping their business from there? And I learned over and over and over their business isn't much different than our business in mortgage. Isn't much different in me coaching real estate professionals. And when I'm able to meet with them, now I'm getting access to their database, and we're doing joint marketing to their database. And that's me being able to add me going from 2,000 past clients that are A's and B's and C's in my database to where I'm able to take on their database of 1,000 to 2,000 clients and do joint marketing their database. That makes sense so far?
It does. It does. So, the difference, you and Craig have something in common. He also advised, going after the whale advisors that, have a few customers that are managing billions, not the best. He talked about working with advisors that have, I don't know if he called it out, but I'll just say 500 or more customers. Makes lots of sense. The salespeople that work for a Northwestern Mutual, those are some of the best sales people on the planet Earth. The training that they go through, the rigor that they go through, they are elite professional advisors and salespeople. So it makes sense that that's where you landed. I just want to make sure anyone listening to this call, it doesn't mean that's where you need to land. I don't want your takeaway to be, Northwestern Mutual, I need to go there. I do think
stay away from Northwestern Mutual.
Yeah, exactly. But your takeaway should be between this interview and the interview with Craig is that, one, you should be intentional, like, how many clients, portfolios do you manage? How many people do you work with in a year? how many total customers do you have? And if it's 100, not saying walk away, but, think twice. And you're looking for people that have more than 500, more to 1,000. And then, hopefully you got to take away, you got to be smart. Mortgages, but look at all the books that you've read. Now, remember, guys, Wally is saying, I am making this a full pillar. I think every loan officer is going to do that. Every loan officer should have at least one financial advisor that they partner with. Wally, anything else you want to add on that topic before we move on to the next question?
I would just say the biggest thing is, I forgot. So I've recently turned 40 and I forget things.
But when you remember that biggest thing, like that's something you're going to need to bring back around, my friend. You can't tee it up. The biggest thing. All right. Yeah. So let's continue. How are you getting meetings with these guys? We know the target. You were thoughtful. You were intentional. How are you getting meetings?
Yeah. I'm sorry. I do remember now. Okay. Thank you. So we talked about, to me, I couldn't, this is just me. I couldn't just come out and ask how many clients do you have in your portfolio or how many clients you serve, right? And most likely people wouldn't tell you the truth anyway. So this is how I asked. I said, talking about your day. Talking about your day. How do you organize your day? How do you organize your week? It's something I've struggled with. I'm doing a pretty good job at right now. Well, when they say, well, I usually have 1 or 2 appointments a day. And I said, is that usually consistently 1 or 2 appointments a day for the week? No, I'll have, 1 or 2 appointments a day, maybe 5 appointments a week. Oh, that's awesome. So how often do you touch your clients? Quarterly or annually? And that tells me they got a very small book. Right? So if you do the math there, they probably have somewhere neighborhood about 50, 60 clients or 70 clients total that they manage. The type of financial advisors, wealth planners that I'm really focused on are the ones that say, yeah, I'll have somewhere in the neighborhood of about 6, 7 appointments a day. That's pretty consistent throughout the week. And if it's consistent throughout the week, I'll touch people on a quarterly or semi-annual basis. Well, those are financial advisors that are going to have 1,000 to 2,000 plus people in their database, and they know how to mine their database well. So if you're a loan officer and you're afraid of asking a wealth planner or financial advisor how many clients do they manage, just ask them how they organize their day and how often they touch their clients, and you can calculate it for yourself.
Cool. By the way, I like that. I think that's a fantastic question. I do think you can ask them that. There's elegant ways of doing it, and it's probably not how you start the conversation, but let's talk about how you get the meetings, and then let's talk about the meetings and the various questions that you ask in those. So how are you getting meetings with these people?
So I had this brilliant idea back in a year and a half or so ago. Is as a loan officer, we get paycheck stubs, W-2s, bank statements, right? And investment account statements. Well, we already have the financial advisor's contact information. So I had my assistant spend about 6 weeks of his time. He went through every single loan that we closed in 2017, and then every single statement, pulled out the financial advisors, pulled out the CPAs, and I was like, all right, so I'm going to bonus you how many appointments you can set for me, how many calls you can set for me. You know how many appointments he set out for me? 0. How many CPAs, financial advisors? They didn't care. And I'm like, dude, let's work on the script. It's got to work. And I'm like, work on the script as, hey, Wally Mortgage, here in Dallas, and I help 300-400 families a year. I've got referrals. I want to refer you business. Can I get an appointment with you? How many appointments do we get then? 0. The point we're trying to make is I didn't receive any kind of success with wealth advisors until I was able to get to the right person at the firm that framed me in the right light to his top 10 advisors in DFW that allowed those people to reach out to me, and they made appointments with me for me to meet with them. That once I got in front of them, it was no difference than me talking to a realtor.
Yeah, well, the takeaway is it's always going to be the most effective way of getting a meeting is to have someone else say how great you are. And it could be a customer, like, hey, would you, you have people that you've done loans for that have important relationships with the right people, have them advocate for you. So there's no doubt a good introduction is where the money is at.
I mean,
Anything you want to add to that?
yeah, before I forget, that fifth page of the 1003, that, it's been around for what, 20, 30 years, it feels like. The script around that fifth page of the 1003 is you saying, hey, Dave, talk to me a little bit about your wealth advisor. And if you had to rate John Smith, would you rate him on a 1 to 10, what would you rate him? If you said anything below a 7, well, I feel you could deserve a lot better class service and they refer him. If they say, well, my wealth advisor, Wally, is a 10, oh my God, Dave, I help 300 to 400 clients a year. I'd love to be able to get an introduction to your wealth advisor so I can start referring business to him or her if they were that good. So you are 110% right. Us loan officers just weren't ever planned or taught that you can just follow the fifth page of the 1003, ask for referrals from the current clients you have in the process. Who do they know?
Yeah, love it. So guys, if you're watching this live, put questions down below, whether you're in Zoom or whether you're watching it in Facebook Live. I'll try to get to those before the call's out. If you're listening to the recording and you have questions, still put them. I'll make sure, or my team will make sure that we get your questions answered. And just a reminder, everybody, and I'm going to put it in chat when I have a minute here. If you are serious about this vertical, also listen to the interview I did with Craig Strett recently. He's, his entire career has been focused on, working with financial advisors. So Wally, let's talk about how you show up in the meeting. Walk us through, some of the questions you ask, some of the conversations, and tell us, what is a successful meeting? How do you know if it's successful? So walk us through your meeting.
With a wealth advisor?
Yeah, wealth advisor meeting.
Yeah, I mean, I just say, I think one of my strengths is asking really powerful questions. And as an affirmation, I kind of learned a long time ago that it is, my focus on my questions are piercing, my answers are motivating, which makes my presence be commanding and my success untouchable. That's something I've said to myself for the last almost 7 years. So I'm learning more about them through the meeting. So my biggest takeaways for meetings are, where are gaps in their business, and or where is gaps in their database, and or where is gaps in their flow, where is gaps in their family life, where is gaps in their wherever, that I can be the one person that helped fill in those gaps. So I like walking away with a meeting with 3 things, 3 gaps. Where is a gap in their personal life? Where is a gap in their professional life? And where is a gap in their health, physical, mental, whatever it is. So professional business to me is only one of those pillars. So if I'm looking for a gap in their business, well, tell me, how do you feel your year is going? It's blah, blah, blah. Oh, it's awesome. Are you ahead of your goal or behind your goal? And then he's kind of unravel that. I mean, I think it was Michael Mayer that taught me, it was the 3.5 most powerful questions, and I just make it conversational. What's your biggest challenge right now in your business? Or what's your biggest challenge right now in your personal life? What's your biggest challenge right now in your health? Whatever you want to do it. Number 2 question is, what have you tried? Number 3 question is, what are you going to try next? And the 3.5 one is, by when? And I just make that conversational through those topics. So if you're asking me, what do I look for it to be a successful meeting for me, is I want 3 takeaways. That they have 3 gaps in their personal, mental, or health, and also their business, that I can be the one person or one vehicle that fills in those gaps and or refers them to a source that fills in those gaps. That answer your question?
That was powerful. Yeah, I did. And would you mind repeating that, that personal affirmation quote? And if someone's listening, write that down and put that in our group. But would you repeat that one more time? I thought it was powerful.
Yeah. So my questions are piercing. My questions are piercing. My answers are motivating. My answers are motivating, which makes my presence be commanding, which makes my presence be commanding, which makes my success untouchable, which makes my success untouchable. And I follow up with a second affirmation is, Wally, what's the point of dreaming big if you're not brave enough to live big? What's the point of dreaming big if you're not brave enough to live big? And that usually helps me have the courage, knowing that I've got 2 sons, two teenagers, the Brave and the Brave and Alexander the Great that are watching what I do, definitely not what I say, watching what I do, and I've got to continuously be brave for them to take action like I take action.
Boom. I mean, mic drop. Like, let's just call it a day. That was powerful, man. And
thanks, bud.
And Eddie, I saw you putting in notes, man. Eddie, thank you for being a good community team leader and putting notes. Now, Eddie, you did put those in Zoom, and now we need to get them in Facebook Live. So whoever is in Facebook Live, let's get those quotes. That's just pure gold. If anybody on the Mortgage Coach team is editing a highlight reel, cut me out of this. But what you just heard from Wally, that was pure money. Let's get that into the Mortgage Coach IGTV network. Again, everything I'm saying right now, delete everything Wally just said. That is a highlight. All right. So that was the goal of the interview for me so far, brother. Although I want everybody, I hope you're getting some gold out of this, that there's a strategy. Strategy matters. You can tell that Wally is being very purposeful. Okay, I built a realtor business, crushed it. Okay, I've got a good client for life platform. Took a year, spent a whole year building a client for life platform, and now he's spending a whole year. So it's a 3-year initiative, building out a captain of the wealth team initiative. And it probably will be 2 more years until it's really built out, because as he said, he crushed it with financial advisors. He still has CPAs to go. You were going to say something?
Yeah, I would just say candidly, that was probably the most difficult thing possible. Meaning that I feel I'm a bad A at what I do with real estate professionals. Could I have gone down the same path and did 80 million, 100 million, 120 million with real estate professionals? I'm sure I could have. Would I just, from open houses to happy hours, would I probably just pull my hair out? Well, it's falling out on its own, so I don't need to pull it out. Yes, definitely. But the point we're trying to make is that in 2018, that was the most difficult thing in my career, being on the phone with clients, going through their escrow account, homestead exemption, how to dispute the taxes. But to me, I did a very poor job with my database for north of a decade. I had to make deposits into my clients that trusted me, into those families' bank account, emotional bank accounts. I had to give my time in 2018, those deposits, where today I'm taking those withdrawals out from their referrals and also giving them referrals. So you got to make deposits in your clients' lives before you can ever earn to take a withdrawal to receive a referral from them.
I love that. This is probably a different call because we've got about a half hour, but I still have a lot on the wealth team. But you made mention that, as a mortgage professional, you've also become a real estate investor. And I know our audience would love to hear more about that. I've interviewed some top loan officers, Cody Touche, who owns a lot of real estate. Josh Metal owns a lot of real estate. So Wally, would you be willing to, maybe do another call on that, or maybe I'll even do a mastermind and I'll invite some top producers that have really built up a real estate portfolio to a mastermind on that. Is that something you'd be willing to talk about in public?
Absolutely. I've got a vacation rental company in Nashville. It's got about 34 doors there. It's also expanding in Miami and LA. So with the vacation rentals, so I can talk about how we started that business. And, the loan officers of yesterday have one job and they receive one commission on one month. If you're financially intelligent, which we should be, I'm blessed to be able to have 4 different income streams today outside of mortgage. And as from the real estate to the vacation rental company to the other businesses I own, but the point we're trying to make is we got to get out of this hamster wheel of get a realtor, get a commission next, get a realtor, get a commission next. And to me, I know real estate very well. You've got some super intelligent people out there like the Denise Donahue's of the world or the Series 7s and all that stuff. More power to people like that. I just don't know that stuff. I don't have that knowledge or IQ or whatever it is. I know my lane, and my lane's real estate. So I focus on being the best in my specific lane.
Love that. Well, I'd love to hear more about it. So let's stay on track. And remember, folks, if you have questions, put them down below. And hopefully I'll look down at Facebook Live and see a quote all those good quotes from Wally. So let's say you crushed it. You got introduced to the right person because you're intentional about who you're looking for. You had a killer meeting. How do you follow up? Like, what's the rhythms? How often do you follow up? Are there any tactics or strategies that you're doing?
Yeah.
Thank you, Eddie. By the way, Eddie, you're the man. Thank you for updating Facebook Live. Go ahead.
I'd say absolutely. There's strategy there. The biggest thing is, you got to first, to me, the first thing we had to do as a team is what we started doing every Thursday from 9/11 is script practice as a team to when we're talking to clients. And that's script practice from my loan officer assistant to me as a loan officer and Shane and CJ as loan officers. Then also my transaction coordinator and then my client concierge of my team. So that's another thing too. Like the previous years I had the business, I had, it's like 2000 and I think it was like 2016 doing almost 100 million in production, but we had a 16-person team. We had dialers at the wazoo and so on and so on. As you're running a mortgage team today, we only have a 5-person team that includes me. So 4 people plus me, almost doing $100 million in production. So the reason I bring all that up is every person on my team has to be on the same bus, has to be in the right seat, saying the right things, going the right direction. So you've got to create a culture as a team that asks for referrals and adds value through the process to be able to earn those referrals from the process. And I think that's the number one thing that most loan officer teams or most loan officers make a mistake on is that if they don't create that culture first, and this is something I'm going to say on stage at Sales Mastery, and I'll give you a little peek of it, is I sat down with my whole team, all 4 of us, so 5 including myself, and Dave, I'm going to act like you're on my team. So I'm sitting down with you, Dave, and I say, Dave, I'm going to give you a pay cut. I'm going to cut your commissions. I'm going to cut your pay, and you're going to make less money. Right? Is that right? Is that what you're thinking? Okay.
Yeah. What?
So
thank you.
Here's what I want you to feel. In the pit of your stomach right now, you feel something. And you feel anger. You feel frustration. You feel underappreciated. And you're diverting that negative attention towards me. So what if I told you, Dave, because you haven't mastered your scripting, you haven't mastered the 5th page of the 1003, you haven't mastered referring out to wealth teams, you are the one that's giving yourself a pay cut because you are not asking for referrals from clients in process. You, Dave, are not the one that's giving referrals to CPAs, financial advisors, family will attorneys. And that changed the whole entire mindset of my team when my team realized that they are the ones giving themselves a pay cut when they're not brave enough to ask for referrals from clients in process. When they're not brave enough to complete the 5th page of the 1003. And I was in that same boat. There's so many mortgage companies right now talking about mortgage compression and pricing issues and so on and so on. When we start realizing that the best thing my boss did from 2006 to 2013, whenever we go and ask for a raise, he goes, yeah, I'll give you a raise. You want more money? Go get another loan. And that taught me that this mindset we have today of feeling down deep inside, we're angry because we're making less basis points, has to have that same mindset, which is a culture we provide. Does that exercise kind of make sense, or you want to open around that?
No, it makes a lot of sense. And so, takeaway for everybody, it's ask for referrals, do it elegantly, do it in a way that's personally connecting, but do it often. So let's do this. We've got about another 20-ish minutes. I want to make sure we talk about how you integrate Mortgage Coach into your advisor strategy. We've got a couple case studies. Craig Strutt was really intentional about how he uses Mortgage Coach, TCAs as case studies when he meets with financial advisors. He's got a couple case studies, and Mortgage Coach just happens to be the way that he tells stories and explains mortgage strategies. How do you use Mortgage Coach within the value prop with advisors? And then when you're ready, you tell me and I'll share my screen and we'll walk through one.
Yeah, I just said pull up the third. I sent you 3, not the first one, not the second one, but pull up the third one. So
Okay, I
this
don't know. I don't know exactly what that is. I think it might be
so
not
first
the first one.
first name
Is
Simon.
it?
No, not Julie.
Okay, okay. And there you go. It's this one, Simon.
Yeah. So that is a wealth advisor that was referred to me from a financial advisor that is at Edward Jones. Okay. And he calls me up. He actually sends me a text. And he sends me, and it's funny. I was on the way to go see him at a face to face. I don't know if you knew or not, but I got a pretty bad car accident about 3 weeks ago. And I was on the way to go see him at a lunch appointment. But on this screen, I put together. He sends me a text. He says, "Hey, I've got a client that he's got this Australian accent. It was like super cool. I've got a client that is wanting to purchase a house, and I was so and so at Edward Jones said that I should definitely connect with you. Can you send me over like a fee sheet?" And I said, I don't do fee sheets. I'm not that type of loan officer, but let me kind of walk you through how I can help. He goes, "Man, if you can do that, I'll meet with you face to face." So I put together his TCA for him, and I send this over to him. And literally, no exaggeration, within 10 minutes of hitting that to his inbox, he calls me. He goes, "Where'd you get this?" And I said, "Well, it's Mortgage Coach." He goes, "Like, how can we market this?" I'm like, "Well, I wish I was an owner. I'm trying to buy in the company, but Dave won't sell me his company. I don't know why." But he was so impressed by this mortgage coach I created for one of his clients that he set up a meeting with me for me to meet with him. Now, on the other side of it, he turned out to be one of these financial advisors that he's like managing like $1.5 billion in money, and he's only got 80 clients. So he's not my best referral source in a way, but I got a chance to get in front of him. So one of the gaps by me asking questions with him that I learned about his business was his clientele is older, and which makes sense because they got so much wealth, but his clientele is older and he needed a reverse mortgage specialist. Well, guess what? I'm reverse certified, but remember, I stay in my lane. So I've got a reverse specialist in my branch that now is able to refer him to her, and now they're meeting, getting referrals back and forth. So the point we're trying to make is this TCA got me the appointment, which then I was able to get referrals and find out who this person was, and now I've got a referral stream of reverse mortgages that we're able to do. That kind of makes sense.
Love it. It does. So, netting out the mortgage coach, it's part of how you always deliver the numbers to the family. It's how you explain mortgage strategies. And everybody listening to this, do you think any financial advisor isn't going to love, where you're showing families multiple strategies? You're showing them, graphically how things are different. You're showing it over time. So this is what financial planners do. They show different decisions over different periods of time. They're always interested in what's a client's kind of interim goals, and then what's a client's long-term goals. And then remember, guys, how cool is this? You can put your reviews. Social survey integrates with Mortgage Coach. So here's the deal. If you want to get referrals from CPAs and financial planners, and Wally, feel free to add on to this, you've got to deliver mortgage strategies and mortgage options and do it in Mortgage Coach, or you're handicapping yourself when it comes to this channel of business. Any thoughts on that?
Yeah, I mean, candidly, you got to be worthy. And I'm probably going to upset some people, but I'm just going to be honest about it. If you're not using Mortgage Coach and you're still using fee sheets, what worth do you have? You've got to be able to add this value through this technology to be able to earn their business, which allows you into their network. Now you've got to streamline our referrals. It all starts by you being worthy enough for the opportunity.
Hey, Wally, we've got 15 minutes. I want to just walk through some of the thoughts I have on creating call it a Mortgage Coach black belt. And it's really, the whole thesis is, how do you go from being a white belt loan officer? And let's face it, just a little history on how loan officers have quoted. When I got in the business in the 80s, this is how we quoted rates. A decade later, that's how we still quoted rates. Through the meltdown, that's how most loan officers quote rates. And even today, while we got a product and pricing engine in the 2000s, most loan officers, this is how they quote rates, and I call that being a white belt. It is the triangle of the transaction: rate, payment, cash to close. So and here's the deal, guys. That is how 95% of the industry quotes. This is your white belt value proposition. This is the white belt question that everybody asks. Hey, how long do you plan to live in that home? Again, everybody does it. Everybody's a white belt in the mortgage business. And then here is the black belt, where, well, actually this is not black belt, this is just orange. I'll get to black belt in a minute. But where it's the mortgage coach advice star, where you still do the triangle up top, but then you always show the cost over different periods of time. And you know when and how to show, hey, what if you prepaid the mortgage? What if you invest the difference? So that is the framework to advance and get out of white belt territory. Wally, before I go on to like what is a black belt, any thoughts on this so far? Do you align with it?
I've got a brown belt on, so I'm trying to figure out where the brown belt is. Let's see where I am. But no, I think it's brilliant because it gives you a roadmap, right? It gives you a map of, for you, there's a great book, obviously you've heard me talk about, called The One Thing. It's called Goal Setting to the Now. If the black belt is the future goal you want to be at, if you're goal setting to the now, where do you have to be 5 years from now to reach that someday goal? Where do you have to be a year from now to reach the 5-year goal? Where do you have to be 6 months from now to reach the 1-day goal, the 1-year goal, so on and so on? So what you're showing loan officers right now, Dave, is you're showing, okay, if you want to be a black belt, this is the roadmap and the steps you've got to do. We as loan officers simply need to have the work ethic and the drive to follow Dave's path.
Love it. So let's go through and let me show you the path to be a black belt, and then let's wrap up. So I mean, this is a black belt value proposition. My advice helps you build wealth with real estate faster by making smarter mortgage decisions, and then I coach you over time to make sure you always have the mortgage to achieve your goals. And that's what Wally does. I mean, he can say this or a version of this, and then he can speak circles around it. Now there are a lot of black belt questions. This is just one where you ask someone, how old do they want to be when their home's paid off? Most borrowers are going to say, oh, I want to be 50, I want to be 55. And then you ask them, well, based on your current situation, how do you really going to be, based off this 30-year loan? And here's the deal. There's always a 5 to 10-year gap, sometimes a 15-year gap between what they want and what they have. And then you really start leveraging that so that when you're delivering that mortgage advice, you're showing them how to pay it off faster. So that's just one black belt question. But Wally, here is how to be a brown belt. Tell me if you align with this. So first of all, you had to have done these things. You need to be capable in all of those. You need to know when and how to put a video on it. I mean, that is a black belt move. You need to know when and how to use audio feature. I mean, you need to know when and how to use technology, when to use Mortgage Coach Live. You need to know how to deliver this omni-channel experience. So you're delivering advice in 2019. It's almost 2020, and you always need to deliver options. So if you've done that, and you've done that over 100 times, you're a brown belt. Now here's to me what black belt is. It's where you've done all of that, you've done it over 300 times, and you can do it in every situation a loan officer gets in. Whether it's a first-time buyer, whether it's a move-up buyer, whether it's a debt consol refi, cash out refi, rate and term refi, every sales situation you get in, you can do that advice star. You could do all the technology around that. 300 TCAs. What do you think? Is that black belt worthy?
I think it's black belt worthy, but I don't know if I'd fall in the category of a black belt, candidly. I mean, when you go through that, you the audio. I don't know how to do the audio. I don't know how to do the live. A lot of things, guys, what Dave is trying to show you is you've got so much options and bells and whistles You just got to get started. You know, you know, I don't do my own TCAs because I don't know how, but I have someone on my team to do it. The point we're trying to make is you can be successful at this, and he's giving you the tools to. So either we need to stop saying, like, not necessarily stop saying, but if you want to be successful at this, there's your roadmap. I wish I had this 20 years ago when I started.
Yeah, well, we're trying to get better at getting people to where they're at. But I mean, when you look at all of those things, you know, they're like, and I know you're a golfer, Wally. So think of these as like, you know, clubs and a golf bag. And, you know, there's a couple things you need to be really good at. You do need to be able to use a driver, and you absolutely have to be good with a putter. And Mortgage Coach as a whole, I don't know if it's the driver and the putter, but it's one of those two things that you need to have. It's probably the putter. You know, like you just gotta, in order to crush it for a family, you've got to be good at that total cost analysis. But like video and audio, those are two different clubs. And you know what? You don't use both of those clubs on everybody. You have to know when to use that club. And Wally, you use video. So I would absolutely, you're a black belt, because you don't need to play with every single golf in the bag, right, brother? You just need to know how to win.
Yeah.
All right, guys. So last chance to ask live questions. I'm going to look down below here in just a minute, see if we have questions from you all. So Wally, you are going to be speaking at Sales Mastery. You're a coach. You're a mentor. If you're like me, I believe that every loan officer should have a wealth team strategy. You know, like being captain of the wealth team and making it a full channel. Some people just aren't there yet. I don't think everybody has to do that, but what is some just advice you give to every loan officer, and maybe advice you'd given yourself, 20 years ago as it pertains to the wealth team? Like, what are some minimum and maximum goals everybody should have?
The biggest thing is have your lane. We're just coming off a $14 million month. So $14 million, which is a personal record. $8 million of that were realtor-based business. $4 million of that was database, and $2 million of that was wealth team. So for me to be able to say, the $14 million I'm super proud of, and we all know how much money we make, right? And you all know how much money you make when you close $14 million. That's super cool, but the most thing I'm proud of is that $2 million. And most people, I don't know if everybody would agree with me, but I feel the most proud of that $2 million because that shows me that my business has equity, and it shows me that my business has worth, and it shows me that business can operate without me. It's actually a business. I don't have just a job. So understand the number one thing, if you're asking me to say it, is think of it as like stair steps. You got it. Ready, aim, fire. Ready, aim, fire. Ready, aim, fire. And you do that by staying in your lane. You do that by mastering your lane. You do that by having a vision and executing that vision and saying no, no, no to all the noise around you. And I'd say the number one thing where I've probably made the biggest mistakes in my career is saying yes here, yes here, yes there, yes there. And I did not say no enough. I'm focused on specifically my lane, and I'm doing a really good job staying in my lane.
Love that. So I've got one more Mortgage Coach community update, and then we'll go into closing thoughts. I do want to announce that we have launched Mortgage Coach IGTV. So there are 4 videos that have been uploaded. A highlight from my recent interview with Bill Hart. We took the 1-hour interview I did on leadership with Ryan Grant, put it down into 10 minutes, or at least a 10-minute highlight. We did a 10-minute highlight from my interview with Shayla Gifford. And then we did just a 3-minute, Todd, in my last interview with him, talked about what's the one question you need to be asking every realtor in today's market. And so you now can get Mortgage Coach content. Not only do we have this awesome YouTube channel, which someone asked, this call will be uploaded into that. And I can assure you, we will also be editing a 10-minute highlight from this that will be in our IGTV channel. So check that out. Give it a like. We are trying to get to over 10,000 followers in Instagram. So please, if you're listening to this, connect with us on Instagram. Check out our IGTV. If there are any interviews that I've done where you want us to create some content for you to view in there, let us know. You can put it in comments down below. So Wally, we're in our last 5 minutes. 1 minute, just give me 1 minute on what are you going to talk about at Sales Mastery so everybody knows not to miss your session.
You know, 1 minute. It probably takes you 30 seconds to think about it. I just say the biggest thing is how I built the strategies to be able to execute the plan of the wealth management. You know, right now, today we talked about kind of overview. What I'm going to give is like the granular mindset that I had to create and the action steps I had to execute to be able to get that production. Like I said, $14 million is great, and $2 million of that is wealth team business. That's great, but that's my most recent end product. Well, what was I doing 3 months ago or 6 months ago? What relationships was I getting into? What books was I reading? Was I reading? And you know, what did my knowledge have to be so I can articulate that during those meetings with those wealth advisors, so I can be worthy to have their referrals.
So guys, if you're already attending Sales Mastery, remember we have a champagne toast and a little meet and greet at 4 o'clock out by the pool at the tequila bar. And if you're on the fence whether you should come or not come, you should come. Go sign up. Use the mortgage coach. Use mortgage coach, mortgage-coach to get the mortgage coach discount. And Wally, in this last minute, as we wrap it up, there's some people on the call that still aren't delivering every family a total cost analysis. So give the community some leadership. You always say it in a way that's powerful. Why should they use mortgage coach? Any advice to just kind of go from I'm randomly giving TCAs to every family gets one? Closing thoughts.
It's the same closing thought that I've said before. How dare we? I mean, we all know how much money we make, 6 figures, 7 figures, 8 figures, whatever you want to say it is. How dare we? You know, these are families that are trusting us to deliver it to them the best option for their family. And if they wanted a Wells Fargo loan officer, I'm not dissing the Wells Fargos, but if they wanted a call center loan officer, they'd go to a call center loan officer. How dare we not provide a higher level of service, a higher level of knowledge if we have it at our fingertips? How dare we not make the income that we make and build the lifestyle, the cars and the houses that we have if we have mortgage coach at our fingertips when these families trust us to deliver them this? And one thing I ask all clients simply is, when you go sell your home 5-7 years from now, do you want to make more money in equity, or do you want the mortgage company to have had made more money in interest off you? Let me show you a path, because how dare we not provide that to them?
Love it, man. Hey, bro, this has been a great interview. I look forward to seeing you next week in San Diego at Sales Mastery. Have a great day, brother. Appreciate you. And if you got any value from this, give us a like. If you loved it, give it a love. Share it with your mortgage friends. Take care, everybody. This call's a wrap.
See you next week.
Take care, brother.
Thank you.